Welcome back. You're still watching Business Watch powered by Nedbank. We are now joined by Toba Kamete, who's the Sales and Treasury and Sales Manager at Nedbank, to give us an analysis on our markets today. Very good afternoon, Toba. Thank you for joining us once again. We're expecting inflation numbers to be released today. What effect will that have on our indicators? And also, it has been confirmed that there is no data today that has been released in SA. What does this mean?
Thank you, Lulu, and good afternoon to you and your viewers. As you've rightfully said, we are expecting inflation numbers to come out of the US today, where for March, that is March 2024. The market is just waiting to see what that print is going to look like for indications of what the Fed is likely to do with its interest rates going forward. The market is pricing in a 0.3% increase month on month to 3.4%. So if that print then comes out higher than that, then it will mean that rates are likely to be higher for longer. But if it comes out then better than that, lower than the 3.4, then it might mean that we are closer to rate cuts than we anticipate.
Okay, so let's take a look at the dollar against lilangeni ukuthi litrade kanjani lamuhla, and also the euro and pound. Sibona ukuthi ama indicators athini. The dollar is trading at 18 amalangeni 49 cents. What do these figures mean?
So it means that as you can see, it's green, which means that the rand is getting a bit of strength. It has been a good week for the rand this week. On Monday, in SA, they released foreign reserves numbers, which were higher than expected. Tomorrow, we expect gold and mining, manufacturing and production numbers. So it's been a good week for the rand. But I think, as I've said, most markets are looking to see what the inflation number out of the US is going to be. But essentially, these are levels that we haven't seen in a while. So it means our clients who are importing or that is who are buying foreign currency can take advantage of the levels that we're seeing now.
Okay, so let's move on to the performance of equities. I saw on the news that the 9 out of 11 sectors performed well and the share price went up today. Tell us more about that.
All right, so that is the S&P 500. So 9 out of 11 of the sectors they performed well yesterday. I think the leader was real estate, and lagging behind was the financial sector, which investors are sort of just waiting to see what the inflation is going to look like. They are also waiting to see the financial performance, because we are approaching financial reporting for the major banks in the US starting from this Friday. So I think investors into financial stocks are sort of looking at seeing what those prints are going to come out as and the performance of those banks that they're investing in.
Okay. And when we look at our commodities, that's when you eat gold. I also saw that gold price went up as well. Is that good news? What effect will that have on the share price?
Right. So gold, yes, you're right, has gone up, trading at $2,359 and 65 cents. So it's mainly due to the inflation pressures that we're seeing, as well as emerging market central banks diversifying their risk and buying gold to increase their holdings, because gold is considered a safe haven metal.
All right, thank you so much. And Nasboga crude oil, those figures, what do they indicate?
Thank you, Lulu. Oil is the price of Brent crude oil is up 0.1%, at $89.43 per barrel. So these basically is due to the conflict that we are continue to see rather in the Middle East, and in as much as there is increased inventories in the US, but I think the uncertainty that comes with the conflict in the Middle East sort of gives an impression that flows or produce from oil going forward are likely to be disturbed in a way. So that pushes the price of oil up.
Okay, thank you. Thank you so much, Toba, for that analysis. It's 2 minutes before 3 o'clock. Especially, and then we'll come and wrap up the show with Sfiso.